Okay, so we have a new episode of Legends and Leaders, and today it's great to have Kaz and Michael here. You guys have been, pretty prominent with investing and with building businesses for quite some time, and you've dedicated a lot of your energy to giving back to entrepreneurs, whether that's through investments, through knowledge. You've written a previous book that got a lot of traction. Now you've got a new one coming out. So I'm excited to have you guys here and get into your story.
Thanks for having us.
Awesome. So, early on, how did this interest in like entrepreneurship and technology, like how did this start? And then specifically this partnership between you guys and working together to build companies?
Should I start, Mike?
Please, you're much more eloquent in explaining it.
Awesome. So I think from an early age, I've always had this desire to build teams and be on teams and lead teams. And that has helped my career quite a bit. I started off in management consulting, if you can imagine that, and then took my first leap in starting an interactive arm of a marketing agency. And then went on to deciding to start golf.com. And it was just all born out of the idea that I could create a team where employees liked coming to work more than they didn't. So that's my journey in a nutshell.
What about you, Mike?
I went to journalism school at Northwestern University, and let's just say it became obvious even in the 90s that journalism in its current form at the time was not going to be around. And so I was just blown away by this thing called the internet. If you remember the beginning of the internet, you probably don't because you're much younger, but it was all about information. It was a free flow of information, democratization of information. And so here I was at journalism school, and here's this new technology that's basically the modern printing press that lets you kind of put information out, not just to your local community, but to the global village. And I went down a rabbit hole and started my first company at Northwestern University called UWire, University Wire, which was an AP-like news service for college newspapers. And that became very successful. We merged with a company called Student Advantage, which we took public as part of the kind of run up to the dot-com crash in 2000. And once I was in, I was in. And so that was the beginning of my entrepreneurial career. I was doing that company when I went to a wedding in Allentown, Pennsylvania, and met a woman in a red dress named Kass Lazerow, who's now Kass Lazerow. I was blown away. She was the first woman I'd ever really met. I just graduated. And we started dating, and we did what I think everyone at the time did when they started dating. They started a company together, which was golf.com.
So how did the idea for golf.com come to you guys, and how did you also get that domain?
So the idea came basically from me when I was competing against my brother and my father. We were using spreadsheets back then to send our scores and all of our stats, like fairways hit and regulation and greens hit, number of putts. And I was convinced that my older brother was cheating every time he sent the spreadsheet back. And I happened to say to Mike at the time, there's got to be a way I can just lock this interface somehow, use the internet so that he just can't cheat. And I would love for us to actually have USGA handicaps. So Mike said, I have an idea. And he said, you know what, we can actually start providing USGA handicaps, and let's do that and syndicate the content, which is what UWire did at the company he ran in college. And that's how it started. And in terms of the golf.com URL, Mike, we got that out of a sale from one of our investors. Is that right?
Well, they weren't an investor at the time, but NBC Sports owned and controlled golf.com, and they put it up for auction in 1999, and we bid $289,000 and won it. At the time, URLs were very important because it's how people knew about you. There weren't the search engines. Yahoo at the time organized the web based on human indexes. So meaning let's do a golf index of all the golf sites. And obviously golf.com was put on as one of them with Golf Online and a few others. And so the URL in a world before apps was really important. And we thought owning a 4-letter domain in an area that advertisers were interested in would turn into a good business. It was early, but we were right. We sold that business for $25 million to Time Warner, which then got us to New York City, which then kind of our entrepreneurial dreams became bigger, and we never looked back.
Mhm. So how did that acquisition happen? Like, was it something you were doing a proper process, or did you even want to sell at the time when that happened?
There's no process, but we knew it was a small space. So we knew Golf Digest, we knew Golf Magazine, we knew Time Warner, we knew AOL, which we were already providing content to. There was, CNNSI. So CNNSI was a big, sports site. And it became obvious with the run up of Tiger Woods. And, if you think back to the time, Tiger Woods was this young phenom who was as big globally as a name as Taylor Swift is today. So, he transcended golf, he transcended sport. And the internet, as it was growing, you had all these traditional media companies saying, we need to own a digital property. And what better digital property than golf.com? And so, we had some interest, and Time Warner wanted to do it. It was all cash, got us to New York City. We did it, and we're very happy to do it. A lot of those people are still our friends today.
Mhm. So after that happened, a bit after you decided to create Buddy Media as well, can you talk a bit about like the founding of that and why you saw this trend early on, helping people connect with customers through social media?
Cass, you want to take that?
No, you go ahead.
Okay, so Buddy Media was really this byproduct of the growth of Facebook. Facebook at the time was very exciting. It was brand new when we started Buddy Media. There was only, I think, 20 million people on Facebook. It was the third or fourth largest site, but what social networking site, what they had done was open up their platform to developers. So all of a sudden you could tap into what was called the social graph, the virtual representation of real life relationships, and make your app social. And I think, we all still believe that things are better with your friends. So you could play a game against a computer, but if you're playing a game against friends, it's just fundamentally better. And so I loved Facebook. I was an early user, because I came out of the student media world at UWire. And I think all dudes loved it at the time for two reasons. You can keep in touch with people without having to pick up the phone. And number two, all the women were on it. And so, it started in college, and everyone, every young person got on it, and we just saw the growth as just it was going to happen. So we made a bet that Facebook would become a real company. At the time, it was very small, and we just got started. And like everything that we've done, we went down a rabbit hole. We became very knowledgeable. We figured out what we needed to do to build a business, and we jumped in.
And eventually that was acquired by Salesforce, to my knowledge, and that was a pretty significant acquisition there. How did that acquisition happen?
Well, that acquisition was going to happen to one of several companies, no matter what, because we'd raised a bunch of money. We just hired a new president, Susan St. Ledger from Salesforce, and we started getting inbound interest. And the inbound interest was from big companies. So it was, Salesforce, Yahoo, Microsoft, Google, which had actually made an offer to buy the business.
Huh.
And, and the numbers were decent, right? I mean, this is like generations changing wealth for us. And so, we love Mark Benioff. We love Salesforce. His offer was not the top offer. We had an offer that, it was $100 million more, actually. There was a written offer, but we really thought that the future with Salesforce, for us, for our employees, for our shareholders, most of it was cash, but it was some stock. And we just loved Mark. We kind of built the business based on Mark's belief that cloud computing was going to take over the world, and his 111 model, which is a big part of our life, which is how do you do, good as you do well. So how do you kind of continue to give back? And that's something that Kass has really infused in everything we've done.
Hmm. So you both seem to have like also put a big focus on investing in others and angel investments and venture. Why did you want to do that shift? I mean, of course you were in a position you could do that, but sometimes people in your position go and create other companies and that is just their entire focus.
I think we sold Buddy Media. We, started it and ran it and sold it in less than 5 years. So it was a big push. And I think Mike had a earnout, and I think we both wanted to try to start to give back to the entrepreneurial community, to reinvigorate all those, coming up behind us. And I think that was just a goal of ours. We like giving back. Like Mike said, it's part of our ethos. It's part of our core values, not only as, employees, but and founders, but as people, right? It's part of our family. So it became a natural thing for us to start to invest, especially in the New York tech scene. As you know, it's just as competitive on this side as it is on the West Coast. And with the notoriety of selling our company, it was, we have a lot of good deals coming our way, and it's been an honor to actually meet so many founders and invest in them.
So one of those great deals was Scopely. How did that happen? Because that was a significant opportunity that I think set a huge precedent for your capabilities as well. Investing a $5 billion exit there, and it was a very innovative category defining company.
So I got an email from Walter Driver, the founder of Scopely, saying I'm starting a new company. We'd met through the entrepreneurial world. And his thesis was simple, and it was one of the few companies that ended up doing for the totality of the business, and still around doing really well, exactly what he set out to do, which is we're going to build games, but they're really going to be social networks. So we're going to build games that are social, that live off of the social networks, but use the social graph and these real life relationships that both existed and would be developed in the games. And so the games were, pretty simple games, but they became social lubricants. If you think of like Yahtzee and Monopoly and Scrabble and, Star Trek, which is a big game of theirs. These are games where you have to either play against others or join a bunch of people to play against other people. And he executed like crazy and got it to a very significant number in terms of revenue, very profitable, and sold it for $5 billion of cash last year to Savvy Games. And, as an investor, there's just nothing better than to see, a founder who you've worked with from the beginning. We were part of the first money in. This is a note that was so basically a loan that we gave to start the company. So to see them build a company with thousands of employees, billions in revenue, hundreds of millions of profit, and then see an exit like that, it's super fulfilling just to see other people succeed like that.
Totally. I mean, that's a great case study. But you guys seem to take a bet on them very early. I mean, when there was not much there at all, and that's pretty rare also for venture capital. Sometimes they don't want to take these really early bets.
Well, we love entrepreneurs. And so we do a lot of deals that others don't do. Liquid Death is one of them. It's a company that first time I saw the brand, I loved. It came out of the science incubator. So Peter Pham and Mike Jones and the team there. And it resonated. The idea that a wellness product, it's water, could be marketed like everything that's bad for you, right? Like Doritos and Skittles and beer. And Mike Lazerow is a phenomenal marketer. We knew it at the time. Fast forward, and the world knows it now. And it seemed like a no-brainer to us, but obviously, as a tech investor, we had to get comfortable with how big could big be. Many investors look at a meeting like that and say, "Here's why it's not going to work. You're not going to get distribution. You're not going to get this. You're not going to get this." Kass and I are always asking well, what happens if it does work? How big can it be? What does the world look like if they pull off what they're setting out to do? And that's just helped us, like looking at companies as, you know, what could happen versus why it won't work, which, you know, is a fundamentally different way to approach the world as an investor.
Definitely is. Would you say there's like specific criteria, Cass, that you have when going into evaluating an investment that if it doesn't check these boxes, you're out, but if it does, you're in?
Definitely. We've developed like six very specific questions that we look at for each deal to make sure that a founder understands what they're doing. I can go into them, or Mike can list them out for you. From my side, I look at the founder and try to size up if he's the right person. Is she the right person to lead this team? Does he or she know what they don't know? I think that's a big thing for founders. Like, are they aware of their gaps? And then have they started to surround themselves by the right people that fill in those gaps, that fill out their team? And can they lead like that without being intimidated or having a big ego? So when we see deals, 10 to 15 a week, I'm looking at what's the team look like? How can this scale? And Mike is really looking and concentrating on the business model. Mike, do you want to list out those six things?
Yeah, we've identified six
Mhm.
topics or six areas that are just the fundamental questions that all entrepreneurs need to answer. And you need to answer these whether you're starting a company or if you're an investor looking to invest in a company. And we didn't go to business school, but this is what's worked for us. So it's basically, what's the product? We got to understand, we got to feel the product. What are you selling? What's the differentiation? Why is it better than existing options? Then it comes down to customer. Who will buy it? And how many of those customers are there? So it's kind of who and the size of the market is really important. We haven't seen a huge company be built in a tiny market. So that's the third and like really important. The fourth is sales and marketing. There are a lot of entrepreneurs that just assume that, oh, it's such a great idea, build it and they will come. That's not how the world works. So how will customers find out about your product? Really key. And that's where a lot of, companies fail and why we say no a lot of the time. We don't think a company's going to be able to break through. And then it comes down to like how we get it to the customer. We like efficient business models, but some have to have physical retail, some have physical distribution. It's really important to understand kind of just supply chain and then how the companies are going to get the products to customers. And then the sixth is just, we call it the financial model smell test, just like on a piece of paper, does it make sense? Like, what does it cost you to build the product all in? What are you selling it for? Whatever's left over so that the difference becomes your gross profit. You then have to pay for all the G&A, the overhead, and then can you make a profitable business out of it? So we don't do incredibly detailed modeling, but from an early stage, it has to pass the smell test. And so, that's how we get to like whether we green light it or not. Then it comes down to the most important thing, which is like, Kass is very intuitive, very good with people. And she goes in and she really looks at the team and meets with the team. And, it comes down to, are these people we want to be with, for the next decade? Because it takes a while to build these businesses. And is it the right entrepreneur for that specific business? And that's how we think about it. We've gotten a lot of things right. And like all investors, we've gotten a lot of things wrong. So, you do your best, you try to make the best decisions, but, businesses are hard and they don't always work out.
Right now, like AI is such a hot topic, and everybody's discussing it. But there's a lot of people that are betting on companies that may be only trends that aren't going to last forever. Where do you guys think are the most promising areas in AI that you're most interested in investing in?
Mike, do you want to go?
That's sure. The AI that we have invested in, they fall into this bucket of they fundamentally change the productivity of companies. So if you look at a company like Frame AI, which we invested in, it's basically how do you use the data to create workflows that just didn't exist. And so if you get hundreds of thousands of customer requests a month, How do you escalate some? How do you automatically answer them? And if you look at what fundamentally drives stock price is productivity. So it's margins. It's how can they do more with less? And as SaaS entrepreneurs, so software entrepreneurs and software investors, we really like this productivity story. We haven't gone deep into generative AI and all of the apps that are powering, like how do you do stuff creatively with these apps. There are tons of companies out there. We like boring productivity platforms that drive profitability and have an immediate ROI. The other company that is an example of that is Tribble AI, which was started by a Salesforce veteran. And that is basically redoing how you as a company answer RFPs. So if you think of a request for proposal, you're kind of doing the same thing over and over again. You have all the information on your side as a company, information about your products, your people, which deals you've won, which you've lost. On the other side, you have all the information about the company that put out the RFP, plus the RFP itself. How do you press a button to get that first draft? And then with that draft, you can figure out what makes sense. So those are just two examples of companies that we've liked and reasons why.
Mm-hmm. So it all has to be, real world practical right away from the beginning.
Exactly. Yeah, exactly.
And that's kind of been the same with other companies outside of AI. So I would think it would work there too.
Absolutely.
Yeah. AI is just the difference between AI and a lot of technologies that we've seen in our lifetime is that it's just a fundamental shift in the same way that the internet was and social and mobile technologies. So think of like the iPhone and the App Store and all of that stuff, and crypto and blockchain. So digital ownership and what you can do with this kind of ledger of truth, which obviously you're very familiar with. And this is kind of the fourth that we've really seen in our lifetimes. And when you see one of these shifts, you just have to jump in and take advantage of it as an investor.
Totally. Kass, what do you want people to learn from your new book? What are you hoping to accomplish with this book?
I hope that founders and entrepreneurs learn immediately what it takes to be a founder, to be an entrepreneur, because I think there's a glorification about, I'm going to start a company, I'm going to make all this money, I'm going to be able to do whatever I want, I'm going to be able to leave work early. There's a 24/7 grind of shoveling shit that you have to do nonstop. And I think that demystifying that for founders is the first thing. The second is we're doing this so that entrepreneurs can learn from us, right? We've experienced pitfalls, we've experienced obstacles, challenges, pivots, you name it, hiring, firing, how to create cultures, what's it like to run out of money and what do you do? These are all things like how do you build a board that's effective, that's working for you? When do you take certain investors and how do you kind of pick things? So what we're hoping is that through this book, people can take the lessons. We have 50 lessons for entrepreneurs and founders to look at, and hopefully that helps them to propel them forward.
Those are definitely good goals. I mean, just education is so important, and you guys have a lot of experience, so giving that back is great. Just the last question I have, and Mike, this would be more addressed to you. What do you want to accomplish now? What are some of your short-term, long-term goals? And Kass, you could add in as well on it.
So we're starting a new phase. And so the way we look at it is the last 50 years have been all about earning and learning, right? Like high school, you earn a degree. College, you earn a degree. And, you then earn your reputation, you earn recognition, you earn people's respect. We feel like we've been very successful and very lucky. These next 50 years are about impact. How do we give back? How do we teach? How do we educate? How do we use what we've earned to make the largest impact possible? And that's really what this is about for us. It's about a new start. It's about being uncomfortable. We've pushed ourselves into the discomfort zone. creating content and getting out there more. It's been a pretty comfortable 10 years where we haven't been out there as we've been like raising our kids and our family. And we feel like we're beginning again, beginner's mind. And it's fun doing new stuff and being uncomfortable again and suffering again, like we did for so many years as entrepreneurs.
Kass, what are your goals now?
I think I'm in an educational phase of my life where I would like for people to get the benefit of the knowledge that we've had and the experience we've had. I also want big time. I really want to inspire a new generation of founders and entrepreneurs. It's an exciting time, as you mentioned, with AI. I think it's also a scary time for a lot of college students and young adults who are sitting there not necessarily having the same kind of skill sets we had. And I'm hoping that we can inspire, some really great founders. That's my hope in the next 20 to 30 years.
Well, that was all the questions that I had. I appreciate you guys taking the time to do this. I think that will definitely be accomplished, with your book and with more content that you guys create. You have a pretty inspirational journey that you've already had, and sharing that is, and amplifying is going to be really great for others. So thanks for doing this and wishing you much success.
Thank you. Thanks for having us,
Thank
Ben.
you. We appreciate it.